Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets hidden in plain sight within corporate filings today. We're looking at Lixte Biotechnology Holdings Inc. And let me tell you, this filing has some interesting moves that could reshape their future. Before we dive in, if you love getting these clear, no. Fluff explanations of complex corporate documents, hit that subscribe button, and don't forget to join our community on Discord. The link is in the description below. So, what is the big news from Lixte Biotechnology Holdings Inc? They've been busy, and this report details a significant acquisition and the creation of a new type of stock. It is a bold play, and we're going to break down exactly what it means for investors and for the company's trajectory. They are acquiring a company called Technologies Europe Ltd and entering into some rather unique payment arrangements. It is not your everyday corporate announcement, so let's get right into it. First off, for context, Lixte Biotechnology Holdings Incorporated is traded on the Nasdaq under the ticker Lixte for its common stock and Lixte for its warrants. This filing is about a key event, the completion of an acquisition. The main event here is a share exchange agreement. Essentially, Lixte is buying all the shares of a company called Technologies Europe Limited. Itself is pretty new, formed just in October of 2025, but it has acquired some pretty significant assets. These assets are related to something called the LIGHT technology, which sounds like a proton-based radiotherapy solution. Think advanced cancer treatment technology. Liora's operations are based in the United Kingdom. At the heart of this deal is what Lixte is paying for Liora. It is not a simple cash transaction. They are issuing 2,700 shares of a new type of stock called Series C preferred stock. Now, this isn't ordinary stock. It has a stated value of $1,000 per S-share, and get this, it is convertible into a large number of Lixte's common shares, but there is a catch. They can't convert all of it at once without shareholder approval, with a limit of 19.99% initially. But that is not all. They're also paying in cryptocurrencies. Lixte is handing over 10.56 Bitcoin and 300 Ethereum. On top of that, there is a cash component of $440,000. And finally, there is a royalty agreement. Lixte has agreed to pay Orbit Capital Inc., the seller, a royalty of 10% of net revenues generated from the light equipment. This royalty has a massive cap though, set at $45 million. This is essentially a deferred payment tied to the future success of the technology they just acquired. Let's dig a little deeper into this royalty agreement. It outlines how Lixte will pay Orbit Capital Inc. 10% of what they call net revenue from the acquired light equipment. Net revenue is defined as gross revenue from operating using licensing, monetizing, or selling this equipment minus direct and indirect costs related to that revenue. This is a pretty standard definition designed to ensure they are paying based on actual profits, not just top-line sales. The total amount of royalties Lixte will pay is capped at $45 million. Once that cap is reached, the agreement automatically ends. They have to calculate these royalties quarterly and provide reports to Orbit Capital Inc. This whole structure is designed to align the seller's interests with Lixte's success in commercializing this new medical technology. Now, about that Series C preferred stock. The company has officially filed a certificate of designations with Delaware. This new series of stock has a $1,000 stated value per S-share, and it doesn't pay dividends. The holders of this Series C preferred stock don't get to vote on most things, which is typical for preferred stock, unless Delaware law requires it or if a change would negatively impact their specific rights. What is really interesting is the conversion. Each share can convert into 1,000 shares of Lixte's common stock, but remember that 19.99% conversion limitation. It's tied to shareholder approval. If they want to convert more than that limit without shareholder consent, they can't easily do it. They have to get shareholder approval, likely at their 2026 annual meeting, to fully convert all of the Series C preferred stock. This is a crucial point for existing Lixte shareholders, as it could lead to significant dilution of their ownership if and when these shares convert. Lixte is required to hold enough common stock in reserve to cover these potential conversions. It is important to note this Series C preferred stock was not registered under the Securities Act, and it is being issued under an exemption, meaning it is not being offered to the general public in the same way as their common stock. To announce all of this exciting news, Lixte Biotechnology Holdings Incorporated issued a press release on the 25th of November 2025. This filing includes that press release, which is important for informing the public about these material events. It is crucial to remember that information furnished under Regulation FD is intended for public dissemination and is not considered filed in the same way other reports are, meaning it doesn't carry the same legal liabilities. Looking at the exhibits, we can see the formal documents backing up these announcements. We have the certificate of designation for the Series C preferred stock, the share exchange agreement itself, and the royalty agreement. These are the foundational documents for the deal. Now, let's cut to the chase. What does this all mean? Lixte is making a big bet on the light technology and its commercial potential. Acquiring innovative medical technology is a high-risk, high-reward strategy. The use of cryptocurrencies in the payment is certainly a modern twist, and the royalty agreement with a substantial cap signals confidence from the seller. Or perhaps a desire to ensure they benefit significantly if the technology takes off. The creation of the Series C preferred stock and its conversion limitations are key considerations for current shareholders. The potential for dilution is real, and the requirement for shareholder approval for full conversion highlights the importance of the existing shareholder base in future decisions. It suggests that the company's leadership believes this technology is valuable enough to warrant potentially dilutive financing, but they are also being mindful of the impact on their existing equity holders by creating these conversion hurdles. This acquisition positions Lixte in the growing field of advanced radiotherapy. The success of this venture will hinge on their ability to effectively integrate Leora's technology, scale operations, and penetrate the market, all while managing the financial implications of the royalty payments and potential stock dilution. The $45 million royalty cap is a significant number, indicating the expected revenue potential of the light technology. If Lixte can generate revenues that approach that cap, it would represent a substantial success. The biggest risks here are the typical risks associated with early-stage technology adoption in the healthcare sector. Regulatory hurdles, market acceptance, competition, and the sheer cost and complexity of bringing advanced medical devices to market are all significant challenges. Furthermore, the company's reliance on future revenue to satisfy the royalty obligation is a considerable financial commitment. In conclusion, Lixte Biotechnology Holdings, Incorporated is taking a bold step forward, acquiring a promising radiotherapy technology. They are using a mix of traditional and novel payment methods, including cryptocurrency and a revenue-based royalty, alongside a new class of preferred stock with specific conversion constraints. This move could significantly alter the company's future if the light technology proves successful. However, shareholders should be mindful of the potential for dilution and the company's considerable future financial obligations. Alright, that is our breakdown of Lixte Biotechnology Holdings, Incorporated's recent filing. What is your take on these numbers and what they signal for the company's future, especially regarding this acquisition and the preferred stock? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more corporate deep dives like this. Don't forget to check out the Discord link in the description for more exclusive content and discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.